Hi, Stanley here. Veeva System Inc. might not be a familiar name to many investors, but this cloud service provider has generated huge gains since its IPO in October 2013. Veeva went public at $20 per share and its share price is over $225 today. That's over 1,000% gain over the past 9 years. Currently, the stock might still appear to be very expensive at nearly 77 times its earning. You might also feel that its upside potential is limited. But Veeva really dominates a high growth niche within the cloud service market and is still on course to reach its long-term goal of generating $3 billion in annual revenue by 2025. Today, let's review what Veeva does, how fast it is growing, and whether it can generate more multi-bagger gains over the next decade for you. But first, I'd like to thank our sponsor for this video, Seeking Alpha. Seeking Alpha is the largest investment community in the world. Seeking Alpha provides investors with a wealth of information through its data, news, earnings transcript, and crowdsourcing analysis. Both personal and professional investors find great value and investing ideas through Seeking Alpha. Personally, I find it extremely useful to keep up to date with company I am invested or interested in. You can now enjoy a massive discount on your Seeking Alpha membership using our affiliate link below. But do remember that promotion is limited time only. So now let's get back to the video. So what does Veeva do? Veeva co-founder and CEO Peter Gassner was previously from Salesforces as the Senior VP of Technology. During his time there, Gassner noticed that life sciences company needed a more specialized cloud-based customer relationship management or CRM software than the one that Salesforce is providing. Therefore, he left and co-founded Veeva to satisfy this idea. Veeva's cloud-based platform now consists of two main ecosystems. Veeva's commercial cloud, which primarily provide the CRM and the analytical services, and Veeva Vault, a suite of cloud-based applications that help life science companies keep track of their clinical trials, industrial regulations, and other data points. Today, Veeva is considered the de facto cloud service provider for all the global life science industry. All in all, Veeva's cloud solution help drug companies achieve three main things. Number one, develop and get products to market more effectively. Number two, market and sell products to doctors and hospitals more effectively. And number three, maintain compliance with all relevant industry and also government regulation. So when Veeva went public 8 years ago, it served around 170 life science customers. But just last quarter, it recorded more than 1,000 customers, including pharmaceutical giants like GSK, Bayer, Gilead Sciences, and Merck. The company has been growing very well. Between 2014 and 2021, Veeva's revenue rose from $210 million to $1.47 billion. That's a compounding annual growth rate of 32%. During that same period, its net income increased at a growth rate of 49% a year from just $23 million to $380 million. Its margin has also expanded over the past 8 years. Between 2014 and 2021, its gross margin rose from just 60% to 72%, while its operating margin increased from 11% to 26% currently. I think Veeva generated such consistent growth over two simple reasons. Firstly, it has established a first mover advantage in its niche market and did not face any meaningful competitor at the beginning. As a result, it has pricing power and the ability to cross-sell additional service to its existing customer. That strength is really reflected in its high revenue retention rate. Its retention rate has been around 120% over the past 3 years. This means that customers are not dropping off, but instead spending more and more every year. Secondly, its intense competition between life science companies really fuel the constant demand for services that Veeva provides. This company will need tools for their clinical trials and regulation and also need to run their customer support and sales team more effectively than their peers in order to be competitive in the market. So can Veeva still grow bigger? Right now, Veeva expects to more than double its annual revenue to $3 billion by 2025. That implies its revenue would grow at a growth rate of 15% during the next 5 years. If it can maintain that kind of growth rate, it could easily double its revenue to maybe $6 billion by the year 2030. And if we assume that investors will continue to pay a premium for Veeva's growth, of course that is a big if, its stock could easily triple within the next decade. Overall, I feel that Veeva's strong market position, its expansion opportunity, and its customer retention all points positively to reaching its long-term goal. So what do you guys think? Do you agree with me? You can always share your thoughts with us below. If you have gotten value from this video, please give us a like and share it with a friend who you might think will benefit from it as well. And if you're ready to take the next step, you can always check out our free investing course at valueinvestasia.com/free course. As always, till we meet again, invest safely.